All right, what's up, everybody? We're going to discuss a little bit about what Mr. Powell said yesterday during the symposium. I'm going to tell you whether or not he was hawkish or dovish, and talk a little bit about the price action we've seen yesterday, as well as discuss what we should be looking for next week. Basically, Jay Powell said that we have a long way to go. That's how he literally started the speech. We have a long way to go. Inflation still remains too high compared to our 2% target. We have tightened rates significantly over the past year, which we knew that, and we are prepared to go further if necessary and intend to hold policy at a restrictive level until we are confident that inflation is moving down to our arbitrary objective. He is ignoring the headline number, and he said in the speech that he would talk about core PCE inflation, which omits the food and energy components of inflation because those two components are too volatile. He said on a 12-month basis, core PCE peaked at 5.4% in February 2022 and declined gradually to 4.3% in July of this year, the last PCE print we had. The lower monthly readings in June and July were welcomed, but 2 months of good data is not good enough. Actual words, 2 months of good data are only the beginning of what it will take to build confidence that inflation is moving down to our 2% target. We cannot know the extent to which these lower numbers will continue, where underlying inflation will settle in the coming quarters. He said on a 12-month basis, core goods inflation remained well above the pre-pandemic levels, so then sustained progress is needed, aka rate hikes, and restrictive policy. Restrictive monetary policy has tightened financial conditions, supporting the expectation of below-trend growth. Since last year's symposium, the 2-year real yield is up about 250 basis points, and longer-term real yields are up as well, nearly by 150 basis points. Beyond changes in interest rates, bank lending standards have tightened, and loan growth has slowed sharply. Such a tightening of broad financial conditions typically contributes to a slowing of growth of economic activity, and there is evidence of that in this cycle. As well, for an example, growth in industrial production has slowed and the amount spent on residential investment has declined in each of the past 5 quarters. But we are attentive to signs that the economy may not be cooling as expected. Then he gave reasons why and ended the sentence by saying further tightening of monetary policy may be needed. We are seeing a gradual normalization in the labor markets, which is good. He said that they are reducing the balance sheet by getting rid of securities. He said doing too little could make inflation be entrenched. Doing too much could also do unnecessary harm to the economy. As usual, we are navigating by the stars in a cloudy environment, is literally what he said. And this is the most critical sentence I took out of the whole entire speech. In such circumstances, risk management considerations are critical. In such circumstances, risk management considerations are critical. And then he finished with saying that they will be data dependent moving forward, and rate hikes or rate pauses will happen as per the data, and finished with, we will keep it up until the job is done. He is very hawkish, very, very hawkish. He's seeing things in the data that he's not liking. So yeah, he's hawkish. What could this mean to the markets? All right, over here to the S&P 500. This is he started speaking. He was supposed to speak at 10:05 a.m. He actually started like around 10:02, and you can see that there was a little bit of activity happening once the market opened around 9:30. It started to get a little bit volatile, and then when he spoke, you can see that the market kind of pushed down, grabbing any longs here, getting them hoped and hyped that they were going to see a nice move to the upside. And then at the end of the speech, literally like 10:15 is the pretty much end of the speech, price dumped, took out lows all the way to Tuesday. Now it did reverse and continue up for the rest of the day. So basically we ended the week up, but if you look at the weekly, it's not a great looking weekly candle. In fact, what it looks like to me is that all we did literally was retested the previous week's open, and then we rejected all the way down to below this weekly support right here. So this weekly support is what is still kind of holding price. But with everything that he said and with all the data that we have coming up next week, I would not be surprised to see something like that and then something like this, and we close somewhere down in there. Now, I'm not saying that is going to happen. Obviously, price could move up, break out, get back above that CPI data and move to higher prices. Obviously, it's a 50-50 shot no matter what. But with this price action, to me, I mean, these 2 weeks weren't bad. These 3 weeks were not bad. This week isn't bad, but it simply is just a retest. So when we see a retest upon a breakdown of support, which was right there, this candle broke down below support. It did hold this support, but we had two support zones really close. This does look like we may be seeing potential breakdown. All right. That's just what it looks like to me. However, if we bring up the exponential moving average on the weekly, you will simply see that you are still well above the 21 on the weekly, which is good for a macro trending environment, if you will. On the daily, doesn't look so good. As you can see there, basically traded up to the 50 and rejected. It wasn't a massive rejection. I mean, it is. It made this low, which took out that low, this low. It didn't take out Monday's low or Friday's low, sorry. But it took out the rest of the week's low. It made a fresh weekly low and then slowly traded back up. And you can see the size of the candle is very small compared to the amount of volatility that was expected during that speech. So looks like the market may be rolling over a little bit here on the near term. We could trade sideways in the range of 44.72, 43.51. Typically, the way we look to do that is if we do get a push back up to there, would probably be looking to be a seller of calls or something. And then if we break down below here, we'll look for a retest and do the same thing. I am pretty bearish. If you remember on Thursday's stream, I told you that I had destructed my year-to-date P&L. I think it was down to like 120 or 160, something in that frame. But I did tell you that I would get it back. As you can see, we are sitting roughly at $403. So I have gotten the majority of what I lost due to that mess up back. And it was due to yesterday's volatility. I love trading volatile markets. It gives you an opportunity to make, decent money. So moving forward, we're going to continue to grow this account. We will be trading futures a little bit more as it is fun. Over here on Bitcoin, basically Bitcoin is holding sideways, and here's yesterday's yesterday's candle. You can see it's not very big. It's not as big as we would have expected it to be in such a volatile environment. However, nonetheless, it tested this weekly support over here. I'll show you on the weekly time frame quickly. This is the support level that I am discussing. It has been holding for 2 weeks. This week it dropped down into this area, held, closed just above it. Then we've seen a very small inside week. This is not exactly what I want to see. I definitely want to see this candle close bullish, as that would give us a little bit of hopium that we could see a move up above this 26, 27 area, which is just where the 4-year moving average is on the daily time frame. However, if this closes here or anywhere lower, this is an inside candle. All right, you did not take out last week's low, and you definitely didn't take out last week's high, so you have an inside candle. This is a downside continuation formation, unfortunately. You had a 12% drop, and then the next week you just basically traded sideways, which is not great. I'm going to be honest with you. Typically what we want to see price bounce back pretty hard, pretty fast. I don't want to see multiple weeks trading here, as that will give Bitcoin more of a chance to break down moving forward. We need it to start climbing. This is where everybody discusses about being a buyer at the 4-year moving average, the simple 4-year moving average, which is this gray line right here. So you can see basically I got that day's open with the white line, which is that 26627 area. We did trade up into there Wednesday, but then got rejected. And then so far we have taken out this bullish candle's low on Friday. So that isn't really a good sign. Now, one could say that you are making higher lows, right? And if you took out that high, then you would have made a higher high, but you didn't take out that high. But that really doesn't matter, simply because we did the same thing up here, if you remember, with this little bit of price action here. We made higher highs and higher lows. All right, we took out that high, and then price rolled over. Okay, so we're in a very difficult spot here, because when he literally said in such circumstances, risk management considerations are critical, like that's the Fed telling you to hedge your positions. All right. That is the Fed telling you to hedge, my friends. Hedge, hedge, hedge. There is a new link in the description for U.S. citizens if you want to be able to hedge your Bitcoin holdings by trading futures. We are using weeks to do that, as U.S. citizens are still able to trade on this platform. But yeah, this is the platform that we're using. Like I said, there is a link in the description. If you use that link, you will save 20% on all trading fees. All right. All right. So what I'm expecting for here is basically I'm going to trade the ranges. All right. If it fails to close dailies under this 25,937 level, I may look for longs. And as we get closer to this level up here, I may look to shorts. What we need to see for any kind of bullish hopium is to get above this gray line. All right. We need to see that buying come in and take hold, and we can see it, go back up. This is something that does happen in Bitcoin quite often. This price action is not new. All right. We can simply go back to here where we started to get bullish. Right into here, we had a nice big rip, and then price broke down, made fresh lows. Then we started to be bullish again, and then boom, big puke. This was during the pandemic, big puke, right? Everybody thought Bitcoin was done, going back to zero and all that jazz, and then it just slowly traded its way back out of there. Now, the reason I think it started to trade its way back out of there is because the Fed had an emergency meeting and basically said that they were going to lower interest rates and they were going to buy securities. So that put a bid under the market. That is the one thing that we do not have for this. All right. The Fed is doing the exact opposite. They are selling securities and they are raising interest rates. So I want you to understand the difference between the two times, the two different cycles. I am not giving up on Bitcoin. I still hold my bags, but I am hedging my positions. I'm doing that with Bitcoin. I'm literally doing that with everything I'm trading. On Forex, I have multiple positions open. Some are dollar short positions, some are dollar long positions. As of right now, I am more structured towards dollar long positions because we have seen the dollar break out. All right, this is a descending wedge formation. You can see there it grinded at the 2023 yearly opening range until finally we have broken out. Something that I want to show you here is on the dollar monthly chart. I want to show you the RSI on the monthly. I want you to look at this, right? We got massively overbought, and then we came back in, and basically you've just been bouncing at the 50, and here you are. So obviously you can see on the chart that you are at monthly res, and there is another monthly resistance right above that at a rough, let's go ahead and get the exact price, 104.954. Those are the two only resistance levels holding the dollar from getting another push to the upside. As you can see, this formation has been broken. This was the breakdown monthly candle that we wanted to see. We were positioned for this via CAD Swiss shorts and other things. So we did make a lot of money on the downside move of this dollar. But the fact that it did close back above support and you have taken out the high of that candle means, yeah, I'd probably expect to see a pullback, maybe down to monthly demand there at 102.93, and then potentially see another expansion move to the upside. There is 5 days and 8 hours left on this monthly candle. Like I said, next week is going to be volatile. You can see a lot of two-sided trading going on. What I mean by that? Well, this is two-sided trading. All right. Whenever you have bearish moves and bullish moves, that's double-sided trading. It's fantastic to make money in double-sided trading. This is pretty much one-sided trading. So now you got the next side. I would love to see the downside continue, as obviously if you do get a big move to the downside, you typically will make a decent chunk of change. But I am hedged up on most of my hodling positions, all the stocks that I own and so forth. But I am trading the S&P futures basically to help the account grow. Thank you guys so much for being here. That's what we're looking for. I mean, it's not looking great. And compared to what he said, as far as Bitcoin goes, the major levels that we're still watching remain the same. It's weekly support and then 2627, 26627, because that's where we traded up to on Wednesday and failed. All right, failed. And we have taken out that candle's low as well. We are massively oversold still on the RSI, but one could argue, well, no, you can't, because those daily closes are not getting lower. So you don't really have any daily bullish divergence there. You do got some bullish divergence here on the 4-hour, but I'm sure that has been played out already because you've already tested the 50. Whenever you test the 50, your divergence is usually done. It's over with. And so far, you're just kind of losing, right? This doesn't look good at all. I mean, you're making lower 4-hour closes. So obviously, you need a 4-hour close above roughly 26,075. That's a rough number. If we get that, that would be good. But still yet, if you're looking for longs, look for longs down here. If you're looking for shorts, obviously, I don't suggest shorting the middle of this range. But it's a pretty big range. And if Bitcoin is going to roll over next week based on the price action, then I would probably be willing to sell any fresh swing highs. All right, so we'll see how that plays out. It looks okay right now, but today's Saturday. As always, Saturdays don't do nothing. You can see you're trading inside of yesterday's range. But I expected so much of a bigger range yesterday on Bitcoin and the S&P 500, but we just didn't get it. And with the data that we got coming out, PCE and non-farm payrolls, GDP, few big things there. So we'll see how it works. But as of right now, Bitcoin is still just trading in a range. That range is 26,627 down to 25,937. You guys have a fantastic rest of your day. Thank you so much for your time. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.